Hey everyone, hope you're having a good day. My name's Andy, channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go through it together. And if you need any help with anything, check out finding-value.com. That is where I go and dive into individual companies. And there's some really good value plays right now in some of these sectors that I really like, but I do think it's going to require a little bit of patience. So let's dive in here. Let's take a look at what's going on today in the markets. So the dollar, the DXY, if I were to look at this, this looks very similar to an oil chart. I'm going to pull up crude oil, and you can see that interest rates and the dollar move very similarly with crude oil. Obviously at much larger percent movements, but they're very correlated. And we're right trying to break out. This kind of looks to me that we're right at resistance, trying to break to the upside. This could get rejected and go down and go sideways a little bit longer. I get it. We could do, your flag pattern here, come up, come back down like that, or something on the lines of that. But with where oil is being traded in terms of gold to oil ratio, with where inventories are at, et cetera, et cetera, et cetera, of a billion different things. I think it's probably going to go higher with time. I don't know the short term, but I think the dollar yields will probably go higher with time, along with oil. The 2-year yields, which again, this is highly correlated with the direction of yields. 2-year yields were higher. We're right up against resistance. We'll see if we can punch through to the upside or if we're going to get rejected. We're basically at the same spot that the dollar's at. We've got the 10-year yield moving sideways, and that still looks good to move higher on the long end of the curve. And then the 30-year was down a little bit, but it still looks good to go higher. No reversal candlestick. Still, the momentum's intact. QYX TNX ratio, I look at this and we're coming back to perhaps this breakout point, maybe. And we're at a very low level. Generally speaking, people were rewarded very well buying gold in all of these locations. And I'm guessing that it will be the same buying it in this particular yield curve inversion. And now we're basing out. And I think eventually we'll work our way on up. I can't tell you how long we'll be down here. We could have another couple of years being suppressed, much like this occurred here. We could be inverted for a while. That started to invert '05 all the way to about '07 for 2 years. We've been pretty inverted since 2022, and it's going to be going on 2 years, but there's no duration timeline that it has to go higher. I think some of this is being driven by stimulus, this move lower. And I think if rates were to pull back, I think we're going to see something very similar to a pull down like in 2000. Rates come on up, and then we go back and re-squeeze. That is a possibility, that same type of movement. But again, if we were to come back, I think the housing starts will kick back on, and I think we'll go back down. I think that could be a potential path. Bond prices, we were up slightly today, and we're right on that support area that's coming up. And that support area is from back here. There's a lot of trading being sold and purchased through this area. So it's going to be pretty good support underneath us for the time being. And then 2 and 10-year, we were up a little bit, so the curve inverted. The short end went up and the long end was down a little bit. So gold's just kind of moving sideways right at the moment. This is just the opposite of the 10-year yield. The 10-year yield was coming down. We broke to the upside, just like this was coming up and broke to the downside. So I think if yields were to continue higher, this could potentially go lower in the short term. Silver is going to be under pressure if yields continue on up. And again, gold and silver do really well under a declining interest rate environment with the yield curve on inverting. The thing that gets it really hard here is stimulus money coming into the system. the rates going up really quick, and how sustaining is that move? That's really the question. If you don't think it's sustaining, then silver is going to rip along with gold. If you think that there is more homes that need to be sold, more credit to be put into the system, um, I think we're going to see a big move in uranium and energy, oil, nat gas. Those are all still ahead of us, and that's the camp that I'm playing. We could get a short-term market weakness where the yields do come back to some degree, but then I think we're going to have to raise rates again later on if they do come back. And I'm not stating that that's 100% in the bag. Platinum down a little bit. It looks like it's trying to base out here. It's been taking a little while here, and I think that a lot of the precious metals are confused with what rates are doing. They're going all over the place. Palladium does look like it's trying to bottom here, and we've got the big buying pressure, short covering moves that we've got in here. So XE to gold ratio moving sideways. We're right at that support level, and it is acting as support on the trend line. We've got the CRB index going sideways. I think this looks good to go higher. I'm in the camp that I think oil is going to go up. I think interest rates are going to go up, and I think energy service will do very well. This to me looks pretty good, and the reason I say that looks good is you get all this buying pressure here, you get this move up, small pullback, get a move up, small pullback, and the sellers are just leaking out. We've broken the downtrend line, and the buyers are starting to gain momentum. So I think oil is probably going to be the driver here to the upside. We have a little bit more selling pressure, not selling pressure. The ratio has gone down to some degree where the S&P is continuing to outperform commodities here in the short term. I do think that we have very rich valuations over in the S&P 500, and I think we've got very cheap valuations in the commodities. So even if these were to go up together, and maybe the ratio stays sideways for a while, I think the risk is greater in the S&P 500 than it is in commodities. That's my take. GDX slightly higher today on the daily. It looks like it's trying to put in a bottom, but we've got lots of downside momentum before it. GDXJ is the same thing. Momentum's trying to put a bottom. SILJ, same thing. Momentum trying to put in a bottom with those hammer candlesticks. Crude oil, it's been kind of weird here. We continue to gap up in the mornings. So here's the past 5 days. We gap up in the mornings and then we get sold off. We gap up in the morning, we get sold off. It's like over and over and over and over. And it seems like we just can't get this to stick, but we are breaking through this downtrend line, and this isn't a huge selling pressure day today. So let's see what comes next. I am looking for a big candlestick to say, yes, we are definitely going higher. If we're going lower, we're going to see a big down candlestick that's going to reject. So wait and see what next week has in store for us. TTF gas, it's trying to get a little bit of footing, but momentum still the downside, no downtrend broken. Natural gas getting sold off quite hard. The inventory of nat gas isn't that bad. It's not $2.50 bad, in my opinion. But the markets, they want to price it which way. And I even think, given where inventory levels are at for crude oil, I think crude oil should be $90 a barrel, given where inventory levels are at. But everyone's got this narrative that there's just this glut out there. Hate to say it, but there's no glut if your inventory levels are at pretty low levels. And we'll go over that. I'll go over that during a Twitter deal. XOP, yeah, you know me. Looks like we're getting some buying pressure here. I like it down here very much. We've broken through the downtrend. We've come back and doing our retest move. We got a couple of hammer candlesticks. Generally, people are back here buying it up with those wicks at the bottom. This is what it looks like. So basically, in the short term, I throw kind of a deal through here. It looks like we've done a double bottom. You get a lead in, you get a double bottom, and then we've broken out to the upside. And this is on a very short-term 5-minute chart. So I'm hoping that this can keep that momentum going into next week, and that's what's giving us these wicks on the bottom. It's basically your lead in and then your double bottom here. But it's on a very short time frame, and those are usually the least reliable that I've seen because anything can fling it around. OIH up 0.67%. Looks like we're getting some support. I redrew this support line as best as I could on the bottom here, the bottom there, the bottom there, and that's generally, hitting all of these bottoms right onto the T as best as I can get it. So we're right on support for energy service. And what we're looking for is stronger oil, nat gas prices for energy service prices to go up. Physical uranium trust, not too shabby today, up 1.5% ish, very close to an all-time high closing. So it's still looking good. We've got URA down 1.14, but we've got some buying pressure. It's with all these wicks at the bottom, still holding in there. Looks like we've got a gap closure here at least as well. There's another gap down there, and I'm not in the camp that all gaps have to be closed. But URANIUM, again, we've got buying pressure on the bottom of these wicks. So what happens is it sells off, then it gets bought back up throughout the day. Sells off, gets bought back up throughout the day. That's what I'm seeing. That's generally forms of accumulation. Someone's accumulating it. We've got URNJ. Let's see if they've got a similar pattern. Got nice little wicks at the bottom here. These wicks there. So it's hanging in there. TAN down 0.86%, little wick at the bottom. Yeah, it looks like it's trying to put in a bottom right where it's at. The OPX up 1%. That's looking pretty good. It's a bullish engulfing. I would be a buyer down here right now. That's a reversal candlestick. This is another one. A lot of the times it comes and does like a double bottom. So you break out, then you do a retest, which is your double kind of bottom. And I think we're going to go higher here in COPX. It looks really good. Lithium looks like it's trying to put in a bottom, little wick at the bottom. You can see it was sold off through here, and then it rallied towards the back end of the day. That generally means you get momentum coming on up, and hopefully that momentum can continue. REMX also trying to put in a bottom, it looks like, a little hammer candlestick. Those are generally reversal candlesticks, and we'll see if we get a reversal or sideways move out of this thing. S&P 500 ripping. Looks like we are starting to break through all-time highs and head higher. I know some people are probably frustrated. They said, well, I should be over in the S&P 500. It's all about risk reward, guys. It's all about risk reward. So it's the market conditions that these trade under. And then what is your risk and what is your reward? The S&P 500 has never been more expensive than what it is today. It's at all-time highs. And in terms of relative value against other asset classes, it is complete bubble. So your risk reward, the upside, I would say, is not that great unless you go into some like hyperinflation, but in real terms, it would still go down. But I don't think the risk reward is very good here, but the S&P continues to go higher, and it's a very strong candlestick that we got today. NASDAQ is the same way. We're busting up, very strong candlestick to the upside, and that looks like we are going to continue higher. Does that mean that I should be riding it up here? No, because your risk reward is garbage. There's a lot of downside risk. And I know a lot of people will say, well, the charts say that it's going to go up, and that is very well true, but it's also at what cost are you going to try to get in here and make money? It could be very, very dire situation. Now, this is a much better setup. KRE, we've got a double bottom. We've got a nice big candlestick today bouncing off support. This would be a much better entry point in the financials than the S&P and NASDAQ based off of the pattern that we've got, which is a big accumulation cylinder pattern. And I think we're going to go way higher in regional banking. I know that sounds different than most everybody, but I go where people don't want to be. Emerging markets up 1.08%. Yields were down a little bit on the long end, but we'll probably get a basing pattern here. XHB looking pretty good. That looks like it's trying to break out, squeezing up a little bit. We've got MU up 0.4%. That's looking good, like it's trying to put in a bottom. We'll see if we can get some traction here to reverse this down falling wedge. We've got copper looking really good here, up 1.2%. Little broken downtrend there to the upside, so that's looking decent. Iron ore down a little bit, 0.6%. Again, I still think we're going to go higher in this. I think we're just putting in another falling wedge pattern or something like that, which will eventually break. Aluminum up 0.25%. Looks like it's going to try to find a bottom like it has all these other times. And it looks like we've got good support where we're at. Baltic Dry Index up 3.75%. There's my awesome little accumulation cylinder that we've got going on. It's actually a good spot to be looking. Baltic Dry Index is probably going to try to bottom here. Newcastle coal down quite a bit, just like natural gas was down 6%. And we need nat gas to firm up here. We need some cold weather. We've got power burn. I mean, demand is going up for nat gas. And inventories were bloated a few weeks ago, but we had some massive draws on inventory that probably puts us around the 5-year average. We're probably around the 5-year average. And coal's the swing producer. So it's waiting for some more inflation. That inflationary surge isn't there yet. We're not there yet. BTC up 1.3%. Liquidity is coming into the system. This one looks a little bit funky, but we've got some stronger selling pressure here. So we're in a little flag pattern here to the downside. So I would say there's still downside potential here in Bitcoin. And I don't see a reversal yet. And Ethereum, it still looks good. It's like just one big flag pattern that's developing here. So it still looks good for Ethereum. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. We've got a 7 a.m. Mountain Standard Time question and answer session on Saturday, which is tomorrow. So if you have questions for me, you can sign up to the website, or if you're already part of the community, join and ask whatever questions on the call. You can send me questions if you want beforehand, and I'll answer them during the video, and I'll tape it. I'll put it on the website afterwards. There's lots of value there. I think somebody wanted me to go over interest rates maybe more in depth. I'll give you what historically interest rates have done. Interest rates in the yield curve is a telling story of where we're at in the business cycle and the real estate cycle. This time around, we had a bunch of stimulus, which could change the dynamics a little bit. So it could be a little bit different than previous times. So that's what I've got, guys, for today. We'll catch you next time. This is Finding Value.